Gary Wagner with Wagner Financial Group, and this is our weekly market update for the Forex gold. Interesting activity in the market, and we did issue a buy signal back on Tuesday. We'll get to that in a moment, but first I want to take a look at a potential setup that we're looking at that could occur over the next couple of weeks. If we take a look at the upper level resistance, and that is from this all-time high right in here back in December, drawing it down to these series of highs, and then draw our support line. We're going to draw it from 750, having it reach these lows over here, and then follow that all the way up to the top right in this area. What you notice is that you have a flag formation or a pennant formation forming. Now, the key with a pennant formation is as the resistance gets closer to the support, in other words, as the range compresses, it's said to build up energy. And then when you do get a breakout, those breakouts can be powerful or strong. In fact, if we take a look, the last time that we saw a pennant formation in the market, or a bull flag, is right in this area. I'm going to draw my highs from this first time it rallied to 1,000, the second time it actually tried to take out 1,000, and you can see what happens right here when the flag comes to a point. The third attempt that the market had at taking and reaching 1,000 was when we hit this particular pennant formation right in here. And of course, what did that do? Well, that carried us up all the way to the record tops and the historical highs that we saw in gold as recently as December. Now, does that mean it's going to happen again? Well, no one can say, but I can tell you this: the potential for a powerful move to the upside or downside on a pennant formation is there, and we'll just have to see what the market brings in the next couple of weeks. We did issue a buy signal, and that buy signal was issued on Tuesday of last week. The market itself set up the move back on Friday, a week ago Friday, with this long black candle here, which opened at about 11:10 and closed significantly lower, down around 1060. On the following day, the market opened and then closed at 1040. In fact, if we take a look at the range just in those 2 days, you're looking at about a $70 range in gold over 2 days. It was quite a wild swing. But here's what we noticed. The candle that formed is a doji. And of course, dojis are known for being able to pinpoint market consolidation. Now, the interesting thing about this particular doji was the length of the tail. And when you have a marketplace that has the sellers sell it down to such an extreme, that's this area here at 1040, but at some point during the trading day they simply run out of steam, and whether it be short covering or fresh buying, the range begins to move back up and actually moves to just above the open of that session. Now, because it's so close, meaning the relationship between the open and close, that's what creates the doji. And that doji was significant, so that was the first indication that we might in fact be looking at a bottom. On the following day, we saw a candle that's known as an inverted hammer. The inverted hammer is simply a shooting star found at the bottom of a market, and then following that was a belt hold line. These three candles together were really what gave us our buy signal. So for those who actually took the buy, we recommended it online, and then on the following day, traders who entered that position entered it roughly at 1079, right in this area. Prudent thing to do was place a stop below the bodies of all the real candles, so we recommended placing a stop at 1060. Now, the market did continue higher through Thursday and Friday and closed at 1093. So we do have a couple of dollars on the trade. But traders, here's where it gets interesting. Let's take a look at the different bands of resistance. In other words, if the market does continue to the upside, where might it go? And what we're looking at right now is a couple of targets. The first target that we're looking at is right here, right around $1,100. However, if the market goes to 1104, it's going to actually break above the top of that pennant formation. And as I said, the interesting thing about a pennant formation is that when you do get them, the opportunity for a powerful break is real. So if we do see a break to the upside, the extension of the line is just simply got to pull us somewhere in the area of 102 to 105. And at that point, where could we see the market go? Well, we know that there's some significant pressure in the marketplace up here at 1120. So that would be our first point that we would look at for the market. Then at 1160, we have another target right there. So what kind of potential is in this trade? Well, we could see it carry the market as much as 20, 30, maybe even $60 higher over the next couple of weeks if it breaks to the upside in this pennant formation. Now, on Friday, we did have our Western technical oscillators confirm the move that we made earlier in the week. For example, on the MACD, we see the two lines coming together and beginning to cross. We'll see if it crosses and continues through on Sunday's trading activity. We also took a look at our stochastic oscillator. And on the stochastic oscillator, we saw the same thing. The percent D's at 25.89, K's at 25.87. They have come together and they do look like they will cross. Again, we'll take a look at that on trading on Sunday. The other thing that we want to look at, of course, is our RSI. And the RSI right now is moving up. It hit a very low area and is beginning to move up to that 50 point. So that seems to be a strong indication. And then lastly, what we want to do is take a look at our moving averages. And this is just some simple moving averages. But you can see that we have reached a point where we've crossed our first moving average right here, and are looking to see if we can take off this other simple moving average on Sunday or through the week. Another reason I like this trade is when looking at our weekly gold charts, we do have an interesting pattern forming, and that pattern is a piercing line. Now, typically we wait for confirmation for the piercing line, and that would be, of course, off the weekly charts. So if we see follow through, as we did, for example, here, or in here, or in here, then we could, in fact, be seeing a market that might rise higher. So traders, I can tell you one thing. We have the potential next week to see some interesting activity in the gold. Looking at this pennant formation and realizing that the last time we saw a pennant formation like this occurred in a scenario where we went to a record top is absolutely interesting. We'll see what happens. Good trading to y'all. This is Gary Wagner. You can always look at us on our website, WFGForex.com.